first of all, we always start the show with talking about what's the most important event of the week. And when we bring a guest on, well, Karen, you're here. Just wanted to ask you, what's on your mind? What's really interesting for you in terms of what's going on in the markets today?
Well, I think what's on a lot of people's minds, especially on Twitter, is the Fed's pivot. They've gone from hiking and reducing the balance sheet to, staying put overnight, essentially. And, this has come as a shock to a lot of people, especially because the S&P is at 2,800. Everybody sort of expected that the Fed would, turn more hawkish now that the stocks were higher, but we've actually seen the opposite. And, part of my belief behind that actually is that it's very geopolitical in which, the Fed is acting. It's not economic per se.
Okay, so in what way? So geopolitics, is this Russia, China? What part do you think, and why is the Fed pivoting so hard?
I think part of it is because, I think the Fed over-tightened in the first place to sort of bring China to heel last year. I mean, I think a lot of people recognized during the year that they shouldn't have been tightening, by reducing the balance sheet and hiking interest rates, sort of on autopilot, right? That's what Powell said, right? Up until December, pretty much in December of last year, he was talking about that. And, and it seemed like not a lot of progress was being made, between the U.S. and China on the agreement until quite recently. And so I take the recent shift as sort of evidence, one of many pieces of evidence that the U.S. and China are coming to a larger agreement, which, our president obviously talks about a lot. And, maybe he's sort of getting ahead of himself at times, but I think that's definitely in the cards now at this point, especially given a lot of recent actions that have come from both the U.S. and China of late. And we can talk about that if you guys want.
So, to some extent, I guess I first heard this theory when Mark Hart started talking about it, and his argument was that that the Fed was going to go dovish as basically an agreement that was made by Mnuchin and Lighthizer in terms of, and I guess that would kind of dovetail into your idea that the Fed was going hard and kind of tightening the screws and causing the most pain to China, combined with the fact that we had the tariffs. And it wasn't until they started crying uncle and was willing to negotiate that the Fed actually came in and started to be more conciliatory. Is that the gist of your argument?
Yeah, that's. I mean, I should full disclosure. I talk with Worthray quite a bit on Twitter and sometimes on the phone, and so we share ideas. And yeah, I mean, our thinking is quite aligned in that regards. I mean, a lot of it is due to the fact that the U.S. has sort of realized that the current status quo favors China a lot more than it favors the U.S. right now, and so Trump has been. His number one job since he's been in office is to renegotiate the status quo with pretty much everybody. And it started first with NAFTA, which, a lot of people have sort of noted didn't really change that much, but it did make certain changes towards one particular entity, which is China, right? Anybody that's dealing with a non-market economy or of the Canada, U.S., and Mexico, they have to tell the other members, and there's certain other implications there that sort of limit China's ability to get around sort of tariffs or whatnot.
For sure, Kieran. In terms of as a Canadian, we immediately recognize that what Trump had negotiated, or more so. I guess it was Lighthizer, or was it the other guy? I can't remember. But regardless, we realized very quickly that we got played something fierce because we are no longer able to go and negotiate deals directly with China without having to go check with our big brother to the south now.
Yes, exactly.
And that was actually a huge kind of concession that we made. And if you think about it, it's in essence forced us, and we see it with the what's the lady from the 5G network? What's that? What's the name of that firm? Huawei. How we've had to go and we've arrested her, and we're in a lot of trouble as Canadians with China. And I guess, as a Canadian, I have a little bit of problems because we're getting beat up pretty bad by China, and our big brothers to the south aren't sticking up for us nearly as much as they used to. Because if you look at it, between the Huawei kind of fallout, we're actually no longer able to sell our canola and all these things, and it's like China's taking it out on us because they can't take it out on you guys.
Yeah, and I mean and that's part of the game, right? And China's playing it as well as they can in those regards, right? They're picking off sort of the weaker links where they can, and they're really punishing you guys in particular, right? And they're doing it to Australia as well. I think they've hurt Australia's imports for iron ore greatly recently. And there's what China is showing you though is that they're a real player now. That as Worth Ray and Mark Hart like to say, it's a G2 world, right? And China is actually like a legitimate rival to the U.S. And these sort of maneuvers are now out of Trump and his administration, and now I think the Fed, is that they're maneuvers that of recognition that China is now a rival of almost equal power, right? And so using that, you can see a lot of actions that stem from that, and they start to make more sense, I think, in terms of where the world is going and sort of what U.S. policy is going to be and how that might affect sort of the markets overall.
And so what do you think is the kind of implications from a market point of view in terms of this kind of change in atmosphere or environment that we've experienced over the last kind of 3 months with the Fed shift and with China being forced to come to the table a little bit?
You're right.
What are the investment decisions that you or kind of changes that you want? What are you watching in terms of for the markets on that side?
Well, I think the biggest thing obviously would be the dollar. And sort of what the direction of that has been, right? And I think markets have been whipsawed since the dollar really hasn't gone anywhere since midway through Q4, right? We've just been going up, 2 or 3%, then down 2 or 3%, and it's just been this sideways chop that's sort of just been grinding everybody up. And right now, I think most investors are sort of overly bearish the euro right now versus the dollar. Maybe that's the right decision. But the real implication and what the U.S. is trying to do is we need to close our deficit with China. And the only way you can do that, you can't, no amount of tariffs is going to change, that. You're going to actually have to fundamentally alter the value of the currencies. And so you're going to have to revalue Chinese yuan if you want to close the deficit. But the question is, does China actually want that? Can they do that? Is that, what's the mechanism of how that happens? And some of those things aren't entirely clear to me right now. I mean, it's very complicated with China having a closed capital account, having a massive housing bubble that which prevents them from opening up the capital account, right? If any Chinese person could take their money out, they would just sell. They could sell their real estate, and real estate would drop, and the capital could leave, right? And that's a real concern for the Chinese people, right?
One interesting theory that I heard on this was when we had Russell Napier on Macro Voices, he floated the idea that even as potentially as early as this year, that I guess it's a speculation that China would eventually be forced to actually float their currency, and to me, that in itself, at least in my mind, makes a lot of sense, because ultimately that's the market finding equilibrium. It's when you're trying to force a specific currency level, the PBOC has to step in there and be the buyer or seller to maintain the peg. And that keeps, then you have to put capital controls and all of these other variables in there to try to manage the money flow from one country to the other. But when you leave a floating currency system, it's where the currency finds the equilibrium to bring everything back in check. What do you think
So
of that?
one second,
I mean, is that possible?
1 second. So I'm going to jump in there, Kevin. It's Kevin, by the way, Patrick. I just want to say one thing. The trouble about that is that, as Kieran mentioned, if they float it, there might be more Chinese trying to get their money out, which would actually cause the value of the yuan to decrease, which would be the exact opposite of what Trump and company want.
What they want, though, but what the point Russell Napier was trying to make is, because of the situation in China, the only way they can deal with their situation is actually a cheaper currency, which is completely the opposite of obviously what both of you are suggesting, which is that the U.S. dollar has to be somewhere maintained in this all of it. But it's going to be really interesting to see whether or not it plays out this way, isn't it?
Yes.
So Kieran, I'll let you talk there.
Yeah, I totally agree. I mean, on the surface, that is how, it seems impossible, right? Somehow you need to create, it's a supply and demand issue. You have to create more demand, that comes into China than that would ordinarily leave, right? In the case of a float. And I don't know, I don't think it could ever be legitimately a completely free float, at least for the next 10 years. I don't think that's in the cards right now. I think it's more of China will start letting, U.S. corporations, foreign corporations actually take capital out if they wanted to. That would probably be the first opening up, because right now, obviously, corporations are quite limited. You make profits in China, those can't come home, right? And that's a real big problem for a lot of corporations, right? And so maybe China can somehow make a way where they're able to, with the U.S.'s help, and I think more recently what we've seen in Europe, for example, right, where Italy, which is the first G7 nation to sign up for China's One Belt, One Road program. They did that, I think, last week or earlier this month, and that's caused a big stir. And even the current finance minister or foreign minister said that the U.S. should mind its own business because we owe China $1 trillion or something. So they were really, they didn't want to take any smack from the U.S. And then, you have Angela Merkel talking about reforming the World Bank and the IMF and a few other, major institutions. On top of this, Macron earlier this week had this ridiculous statement, after, meeting with Xi, saying that with China, they're going to make the planet great again, and that he was angry at Trump for pulling out of the Paris Climate Accord. But what I'm saying is you're seeing a shift in Europe, this European shift more to the east. And, Europe has a decent amount of savings, at least in Germany, where, they could conceivably start to convert their savings either in dollars or in euros into yuan, right? Germany does not want a strong euro. So how can they counterbalance that? Well, they can just buy yuan. They can buy RMB denominated bonds and have China use their excess capacity to build out Southern Europe. I mean, I'm not saying it's a smart idea for Europe, but that's sort of the idea of where they're going and how they could help prop up the yuan by shifting their savings essentially and trading in yuan with China to build various things. And so once again, this all sort of goes back to can the rest of the world bring in demand to bring in yuan demand to counteract any demand that may come out of supply that may come out of China, sellers, essentially people selling their domestic renminbi and getting out. And that's sort of the biggest question of whether or not it's possible or not. And you obviously would need the Fed for this to start going more dovish, right? You can't have the Fed hiking interest rates and tapering, and reducing the balance sheet, right? That would sort of just throw a wrench in the whole program. And I would just say, sort of, and I know I'm rambling a little bit here, but in terms of these whole spheres of influence that are forming, right, and by sort of how Europe is shifting east, you're seeing America shift more and focus on the Western Hemisphere only. This is very specific here, right? How the U.S. has really started to focus down on Venezuela, and actually Bolton, which is the National Security Advisor, I think that's his role, John Bolton recently put out a statement saying that against how Russia landed troops in Venezuela, and he specifically said no, any non-Western hemisphere power should stay the hell out of the Western hemisphere, saying this is our neighborhood, this is our sphere of influence. We're going to focus on this for now, and you guys can deal with the rest of the world. Because obviously nowadays, the U.S. has shale. We don't need to worry as much about what goes on in the Middle East anymore, except for maybe trying to muddle with China's own energy security. That's pretty much it. And I'll sort of, I'll stop the rant there for now and let you
No,
go.
it's Kieran, it's great. So actually, I have a question for you in terms of, I'm sure you're familiar with Peter Zeihan. Is that how I say his last name?
Yeah.
The geopolitics analyst that argues that the days of America being the world's policeman are over. I'm wondering, do you have any feelings about that? Like, do you foresee a point? Is this the beginning of a new era that, like he believes, where we're no longer going to see America worrying about the Chinese South Sea or whatever it is, and going around and making sure that they're the policeman for the world?
Yeah, I think that's a really good point of his, and it's definitely headed in that direction. Especially if you mentioned the South China Sea, where arguably China is at par, if not stronger than us, in that one specific region. Now that they have, sort of certain weapons, and they've built out sort of essentially aircraft carriers on these islands, stationary aircraft carriers, right? And so, it's not like the U.S. If China wanted to, they could conceivably in a few years take Taiwan, and the U.S. couldn't do anything about it. And I think that's sort of where we're headed, simply because we don't really have a dog in the fight anymore. You see the U.S.'s relationship with Europe and Europe's desire, to partner with China more, and specifically, look at Huawei and the 5G technology that they're offering Europe, right? They're essentially it's on par with the U.S., if not better, and China's willing to subsidize it and give you, half off or something, right? So Europe's looking at this deal and is like, wow, let's do this. It's way better, right? And so I have to agree. You sort of, I think Peter Zeihan says specifically, this is the U.S. Simply has no dog in the fight anymore. But we do have bases around the world. We still have the largest military, the largest navy. So it's not like we're going away. It's not like we're not going to keep that upkeep. But I think over time, at least relative to China, it's going to that advantage is definitely going to dwindle.
Okay, so I'll ask you to finish up with one last thought about China. There's a famous Texan hedge fund manager who thinks it's going to collapse in a fiery mess because of all the credit. Do you share his view?
Kyle Bass? Sorry, maybe you shouldn't have named him.
It's all right, no problem. I'm sure Kyle, if you're listening, we love you, bud.
I think. Look, on the economics, it makes sense, but it's China, right? It's sort of one of those geopolitical, the geopolitical forces are clearly, I think, aligned against this outcome for now. And China clearly, who knows how they pull this off, how they keep it going, but they continue to do so. And everybody's lost a lot of hair and a lot of money trying to bet against them. And, it's just something I'm not interested in doing right now, and especially because of my geopolitical views right now. Maybe that changes. Maybe, the swine flu gets out of control and China, seizes Taiwan as a way to get back at the U.S. because their economy's imploding. Things can get really dark really fast if China's real estate bubble blows up. It's sort of like, what did Hugh Henry say, right? If China's economy collapsed, you jump out the window, right? Like, I mean, it's sort of that one kind of event, like the world's over if that happens.
Yeah, but don't worry about Hugh because he'll be in his St. Bart's house, and it's the first story. It's a bungalow. Okay, well, listen.